What's up, traders? Welcome back to another video. Today I want to do 3 trade breakdowns for you guys, and the reason why I chose these 3 trades were not only because they were my most recent trades, but also because there's good and bad things that we can both learn from these trades specifically. So I'm going to go back into TradingView now. I'm going to show you exactly what the trades looked like, what the setup was, what my thought process was, and just take you through it step by step. All right, so we are here. This is Sunday's chart, so the start of a new week. We're coming into the markets with a fresh mindset, continuing from our 7-week win streak from last week. So we're definitely hyped up for this week. And we could see straight off the bat that we're going to potentially be looking for bearish moves. On the higher time frames, we can just see that it is pretty bearish here. Just lots of downwards movement, right? Very heavy downwards pushing. We are below our EMAs on the higher time frame as well, so we're looking for potential shorts. That's what the higher time frame shows us. Doesn't necessarily mean we're going to be going short. It just means that we have higher probability of short positions coming into our favor. So we drop down to the lower time frame and we wait for potential entries. So I'm going to take this back into replay mode just to help you guys understand what actually was happening. So if I come here, and we'll just come right around here. So initially, my first thought process when sitting down was we are going to enter shorts very soon, probably before the Asia session actually opens. As you guys know, with my strategy, I always like to enter during the beginning of the Asia session for whatever position I'm entering in. And I could tell from here that we had a very good potential Fibonacci sequence heading to the bearish direction and potentially looking for a short position somewhere within our 0.5 to 0.618 zone. Now, the reason why I did not just randomly place an entry at my 0.5 or 0.618 zone was simply because my stop loss was too big. I wanted a little bit more confirmation that we were going to continue to the short downside, especially when we have a bigger stop loss that we might need to overcome. I like to see a shift of structure on one time frame lower, which would be the 1 minute for this case. So if I come down into the 1 minute time frame, then we will simply wait for a shift of structure if it does decide to retrace back into our area of interest, our fib levels, also using our EMA as resistance. So let's continue the chart here. We'll continue a couple of steps, and we can see we did not enter, right? And good thing we didn't enter, because we would have likely been wicked out or very close to wicked out. Depending on where you put your stop loss, you might have been screwed here, just in general, just because you don't have enough confluence for the trade to continue short. All you are doing is just basically banking on a shift of structure, and we don't want that, right? We want a little bit more confirmation. We want some more entry signals, anything that's going to tell us which direction the market is going to be moving in and which direction volume wants to head in. So this was not our position that we entered in, but that was my initial thought, right? And it's actually very nice to see that even though we didn't enter in this position, at the open of the Asia session, we start to see a lot of bearish volume entering into the market. We can see some pretty big red candlesticks here pushing downwards. And most importantly, we break below this bearish candlestick right here. And the reason why this is so important is because, as you guys know, reverse head and shoulders is one of the strongest reversal patterns in any type of market. And you will see it day and night, how often you will see it for just working in general, right? So it's very clear here that we have a left head, we make the head, and then we're coming up to make the right shoulder. So not only do we have a shift of structure, we're also creating a reverse head and shoulders to continue momentum bearish with confluence from the Asia session open, already pushing bearish pretty heavily. So very, very nice to see here. So we're just going to continue price action here. And I guess I'll mention right here my fib sequence, right? Next up, we have our fib sequence. I put it from the top of the push all the way down to the bottom of the push, and then simply had my entry at the 0.5 zone. The reason why I did not want to put it at the 0.618 zone was because tendency for the Asia session, especially USD JPY, whenever we see a big push, we see it continue heavily fairly quickly. So you could even see here, we did start to get somewhat of a retracement, but it never reached our 0.5 zone and then decided to continue bearish. But we didn't get a huge rejection or a huge breakout from that market structure point. We can see it actually started to trickle back up, in which case I still left my sell position in the same exact spot, and we get entered into the trade. So we're here at a pretty good entry, only we're down maybe 1 to 2 pips at most. So very, very strong. And this is on the 1 minute time frame too. So you got wicked in here and you're already heading into profit, which is amazing. So what's next? Next step is to see where you want price to end up for your target, and also where you want to move your stop loss if you're trailing your stop loss. So a pretty general rule of thumb is that you want to place your take profit at areas of support, resistance, or next market structure point, or anything that's where there's high probability it's going to head back up against you. So in that case, that would be this lower market structure right here, right? We created some pretty significant lows here. There's definitely going to be some potential support here where price might continue upwards. So we want to make sure either one, we're putting our take profit exactly at the position, or once we start entering into that zone, we want to keep our stop loss pretty tight if we're trailing our stop loss. So price is continuing very heavy short here, and this is where I start to trail my stop loss significantly tight. I might just do a quick little demonstration. If you want to see the live video of me trading this exact trade, you can check it out on my Instagram. I will have my Instagram link in my description, but I post time lapse of all my wins and losses. So here you could see I would put my stop loss here, and then as price is continuing downwards, I am continuing moving my stop loss lower and lower. As soon as we get a good break below our 1 minute EMA, I start to build up a lot more confidence as well that this trade is going to continue to push heavily in the bearish direction. So again, I'm just continuing as these candlesticks are closing, I'm moving my stop loss closer and closer. And then we get a huge candlestick to the downside, which is this one right here. And we could see that it mirrors up with this lower wick and the top of the entry of this candlestick. This is the volume that came into the market for that candlestick. So what I was worried about was having a very strong rejection and flipping this candle up pretty quickly, because we do tend to see that a lot in the Asia session with USD JPY. Volume will just reverse on you so quickly. So my mistake in this trade was keeping my stop loss a little too tight. So we can see that once this candlestick was all the way down to here, I decided to move my stop loss very close to where price actively was. Is it a bad thing? No, not necessarily, because you're trying to secure as much profits as possible. But then you might get situations like this where if you just gave yourself a little bit more breathing room, then you can see we would have been able to catch a lot more candlestick structure to the bearish downside. So yeah, we see this trade did work out very, very well, but even though this was a 2.24 risk to reward, we could have potentially cashed in on something significantly more, over a 3.5 risk to reward ratio. So that's why that was my one mistake for this trade. I was keeping my stop loss a little too close to where price action was. So taking me out here, it didn't even flip colors. That's how close I was keeping it to the exact price. All right, so now it's Monday. We're moving on to the next trade, and we can see as we sit down at 6:30, right around the time where you want to start looking in for positions, right before the Asia session opens, we start to see a very strong bullish momentum move. Not only are we seeing very strong bullish momentum, we're breaking a lot of highs, we're breaking a lot of market structure, and we're also very strongly using this EMA as support on the 5-minute time frame. So already right off the bat, as soon as I sit down at my computer, I'm already looking at very high confluences that are telling me where price action wants to continue and where direction and volume wants to push. So similar issue that we had in the first trade, we end up creating this fib sequence, which ends up being really, really big. We can see my stop loss probably would have been around 12 pips, which is actually not too bad. It's not too big. But then again, I wanted to see a lower time frame shift of structure on the 1 minute, simply because of this EMA and also this big fib zone that we have on the 5-minute time frame. If we can get a strong shift of structure here within our fib zone, then that is a very high confluence that we know exactly where price action wants to end up. So I'm going to bring this down back into the 1 minute time frame, and we could already see as we're sitting down, to me, it's very obvious, maybe because I've already seen this 1,000 times over, but we could see the EMA is starting to attract to price action. We can see this bullish momentum coming into the market. So let's just continue to show you exactly what the fib sequence looked like. All right, so exactly like I just said, we used our 1 minute EMA as support. Not only did we use it as support, we used it very well within our 5-minute Fibonacci sequence. We are also taking out this demand here, right? We're using a lot of confluences to build our confidence on this trade and our probability. There's a lot going on, so you need to be able to see these little details to help you understand what is going on. Again, here's my fib sequence going from the bottom of the push to the top. We have our 0.5 and 0.618 zone. And there is actually one mistake that I did make during this trade. This one is a silly mistake that honestly nobody should be making, but I typed in the lot size incorrectly when I was placing this trade. So I initially had my entry right around here. I think it was just a hair above this demand zone on the 1 minute time frame. So my entry should have been right here with my stops right around 5 to 5.5 pips. This was the entry that I wanted to hit. And we could even see that we would have been wicked into our entry. But unfortunately, it didn't execute my order because my lot size was incorrect. It was just way too big. So I ended up quickly entering into a market buy position. So I took a little hit on the spread. It is what it is. And that's why my position opened up here instead of down here at the 0.5 zone. So either way, this is a very strong entry position. We can see we still wicked into our 0.5 to 0.618 zone. We used our EMA very well as support. We also took out this demand on the 1 minute time frame. We have our nice shift of structure to the upside. Just so much confluence for this trade to continue to the buy side. We can see we get wicked into our position here, and that is basically it. We just let this trade ride, even if it comes down into drawdown a little bit, right? We're just staying very confident. Once we see this push, this is where I start to trail my stop loss. So again, I'll do a quick little demonstration. You can see it on my Instagram too. Just recently posted a video of this trade live. So as soon as we see a nice breakout above these market structure points on the 1 minute time frame, also adding extra confidence that we are using our 1 minute EMA as support here, I am very confident to reduce my risk and bring my stop loss to about halfway. So right now, if it does decide to tank, I'm only down 0.5% for the day, which is better than nothing, right? I do not want to be down 1% if we are up almost 1% in profit. So we can just continue here, and now we just continue to set and not really set and forget, but we continue to push upwards, right? So as price action is moving up, I'm moving my stop loss, comes back, right? We see another nice big push up here, coming back, continuing to move our stop loss higher and higher. Once we start to see a bigger and bigger push, that is when I start to trail my stop loss very tightly as well. And again, something very similar happened where this candlestick right here, this candlestick was very bullish at this exact moment. So we can see it came all the way up to here, right? This is where the top was. So when it was at this top exactly, that's when I decided to move my stop loss right here. And then we can see it just came back, did a quick little tap into my stop loss, took me out of the position, and then continued bullish again. So that's the same mistake that I made on Sunday. We are making again here on Monday, which is kind of unfortunate because we can just see price action literally doubled. We could have doubled our profits within 2 to 3 minutes if I just kept my stop loss a little bit lower than, instead of trying to be a little greedy and taking as much profits as I can. So it is what it is, but this trade could have been a 3.75 when I only cashed out a 1.84. It is what it is. It's not going to be a big deal. We took a very good winning position for the day, so I'm not going to be upset. I'm not going to overtrade about it, right? We're just maintaining trading psychology, and we're going to maintain our trading strategy. All right, so the final trade I'm going to talk about was the trade that happened today, which is Tuesday, February 25th. So I sit down right around 6:30, 6:45, and we can start to see a beautiful shift of structure to the downside on the 5 minute time frame. We're using our 5 minute EMA as resistance pretty strongly here, and we're just seeing a very strong bearish push to the downside. So when you see something this strong on the 5 minute and 15 minute time frame, there's really no other reason to be looking for buy positions unless you have some major confluence that you're saying price action is going to reverse out of the shift of structure on the higher time frames. Then there's no reason you should be looking for buy positions in this scenario. So we can see here, I'm just simply being patient and waiting, right? Waiting for market structure to develop and see what happens. Here I draw my 5 minute fib sequence from the top of the push to the bottom. Again, not entering in at any specific or random point, simply because our stop loss would have been too big. we would have had basically a 16.5 to 17 pip stop loss, which is a little too big for me. And I wanted to see more confluence in the trade that is going to continue to the downside. So what does that mean? We want to see our 1 minute shift of structure. We want to see EMA being used as resistance. We want to see supply and demand being taken into effect. We want to see a 1 minute Fibonacci sequence being used. All these little things are extra confluences that we want to see. All right, so price action is continuing. The Asia session market opens. We can see there was actually a very strong bearish momentum push on the Asia session open. Again, adding more confluence to our trade that it wants to push bearish. We're seeing heavy seller momentum entering into the market. There's no reason why we should be looking for buy positions if not only trend is going bearish, but momentum is pushing bearish very strongly as well. So we're breaking below our 1 minute EMA, which is also fantastic. And now we see also a shift of structure. This one you might be debatable about. Maybe I could hear your guys' opinions as well in the comments down below. But I was really keeping an eye on this candlestick here. It might be super small for you guys to see, but essentially if I zoom in a little bit, we can see that this was a red candlestick. This candlestick shows a somewhat of a support and resistance market structure move, right? So if there was a time frame that's actually lower than the 1 minute time frame, which there's 30-second time frame and 15-second time frame, those are way too small. But what you would see right here is market structure pushing bullish, coming back, and then continuing bullish again. And that is exactly what this market structure is doing right here, except we only get to see a very quick glimpse of it in this 1 minute time frame. So when market structure decides to break below this point, that's what I count as a shift of structure to the downside on the 1 minute time frame. Very nice confluence to see. So what do I decide to do? As usual, drawing up my fib sequence from the top of the push to the bottom of the push, and then we are simply waiting for a retracement. I have my entry right between the 0.5 and the 0.618 zone, since I would like it to use our 1 minute EMA and also come in a little deeper into this fair value gap as well. So I don't really trade fair value gaps or inverse fair value gaps, but just little extra confluences that I might think of off the top of my head, I want to use as much as I can and try to get the best entry position. And we can actually see I executed the most perfect entry position I have in months. This thing wicked into our entry by exactly maybe like less than a pip. Let's measure this real quick. Hold on. We can see 0.5 of a pip. That was how much drawdown we were in. When your stop loss is only 10.5 pips, having a 0.5 pip drawdown and then going straight into profit, you cannot get more accurate than this, right? And it wasn't because of exact level. This was definitely a little bit more loose. I could have entered my position in maybe at the 0.5 zone or even a little bit higher. Might have not even been able to get in there, but somewhere within this zone is where I'm always looking for my entries. And here just happened to be the spot where I decided to choose. And then right off the bat, we can see our 1 minute EMA is perfectly being used as resistance here to head to the downside. And the same thing that I did in the other trades, I'm going to be trailing my stop loss. So, which I will be posting a video of the time lapse very soon on my Instagram, so go check that out. But you can see I will move my stop loss here. After this candlestick close, I will move my stop loss a little bit lower, continue to move my stop loss, moving it lower, until finally we have this blue candlestick. So I move my stop loss right above it, right at that point. And that's where we get taken out into the trade when this red candlestick comes back up and wicks into it. Yes, there was potential. Maybe I was a little too tight with my stop loss again. If I decided to give it a little bit more breathing room, we can see I could have potentially cashed in on a little bit more profit. But either way, this was definitely a good trade because not too much long after, we can see price action decided to start to head to the upside pretty bullishly. So if we held for way too long, then we're going to just be eating away at our profits, and we don't want to do that, right? We could even see a nice shift of structure here to the upside and just continuing bullish from here on out, right? We're only in this trade for literally 5 minutes. We were in this trade for 5 minutes and netted a 2.53 risk to reward ratio. I will take that any day of the week. If you do some simple math, right? If you say you're on a 300K challenge account, you're on a 300K funded account, risk 1% per trade, that's $3,000 per trade. You hit a 2.5 risk to reward. That's $7,500 profit in 5 minutes of trading. That is insane, right? So that's the whole point of the statistics of trading, which is why I love it so much. But again, we're just shooting for these quick moves in the market, using as much confluence as we can from the higher time frames, and then looking for shifts of structure and EMA support and resistance on the lower time frames. And that's basically it. That's how I ended up over 6.5% profit in the past 3 trades. And I hope you guys learned something amazing from this video. Thank you guys so much for watching. Don't forget to stick around for the next video, and also hit up my Instagram if you have any questions or comments at all. I will be happy to reply. Good luck trading this week, and I will see you guys in the next one. Peace.